What's going on, everybody, and welcome back to the FBA Capital Trading Channel. And today I'm bringing you guys another video. And today I'm going to be going over Friday's NAS100's daily range case study. And without further ado, let's get right on into this breakdown and markup. So the first thing we're going to do is we're going to mark up the previous day's high and the previous day's low. So boom and boom. As you can see, the previous day's low did get ran through, and the previous day's high did not. So what does that mean for me? It just overall tells me that today was, well, not today, yesterday was an overall bearish day. So just if I say yesterday or anything, I am recording this daily range case study on Saturday, but I am going over Friday's daily range, if that makes sense. So the first thing I want you guys to realize is, me personally, I didn't expect price to have this major drop like it did. As you can see, price had this small, very small retracement. Not, looks like it's almost not even 23%. It's about like a 20% retracement. Yeah, about a 20% retracement. And that didn't even retrace to 38.20%. So personally, I wasn't expecting price to have a drop like it did. But the first thing I want you guys to realize after we get this outline done. So let's get this Asian session range. Boom. And boom. Got the Asian session range. Hold on, let me get this high right there. I have OCD, so I gotta make sure everything always looks perfect. And then we're gonna get the 12 a.m. open, which is going to be right here. So now there's gonna be a few areas in price I want you guys to bring your eyes to. I want you to pay attention to this high, this low, and this high right here. These are going to be the main areas of price I want you guys to pay attention to. So the first area we're going to talk about is this high right here. Why is this high important? This is the high that was created after we cleared the Asian session range. So we ran above, cleared the liquidity above the Asian range high. And as you can see, price cleared that liquidity and immediately started to come back lower. So what does that tell me? Me personally, I was expecting price to potentially have a potential London continuation to the downside, in which price could likely keep this overall bearish momentum and keep going short. So let's see what happened afterwards. After that, price came down, cleared the liquidity below this low, and then ran back above, clearing this high that was created during that London session. So let's annotate that right here. We have the London session highs getting cleared. We have the London highs. We got the London high. And then right over here, at what time? At 8:15 in the morning, price ran above and cleared that high. We cleared that high, and then price ended up creating the high of the day at this time. So we have the high of the day at 8:15. Got the high of the day at 8:15 a.m. after clearing London highs. We didn't tap into this big figure level, but you can see how close price did get to it. We came damn near to 13,800. We didn't tap into it, so that's not going to be annotation that I'm going to annotate. But we have the high of the day at 8:15 a.m. after clearing the London highs. And also keep in mind, we were above the 12 a.m. open. Hold on, let me fix the spelling. So let's annotate that also. Plus, above the 12 a.m. open. And what does that mean for me? When we're above the 12 a.m. open and we're ideally bearish, this is going to give us the best selling can't think of the word, selling entries, positioning. It's going to give you the best possible chance that price is going to go the other way in your favor. So now we're going to look at how you could have potentially caught this trade. Let's say price came up, you didn't catch the short, you let price come down. So now what could you have done? Simply wait. That's the best thing I could tell you guys. So we're going to wait for price to come down. So from this high to this low, I'm going to draw a fib. So you can see price came down, created this low, and then you can see, let me get rid of these fib levels. We're going to get our other fib levels. You can see price retraced all the way into these fib levels right up here. Had this retracement, retraced into it, tapped into this order block right here that was created at that 8:15 in the morning. So this order block that was made when it made the high of the day, this is what price retraced into. So right in here. So right at what time was this? At 10 o'clock. So at 10 a.m. we had the fib short that we drew from that high to this short-term low. We had the fib short along with that 15-minute order block rejection. And also pay attention to where we are price-wise. We retrace into that quarter point, 13,750. So that's a quarter point. So let's annotate that also. We tapped into 13,750 quarter point level. And from here, price expanded to the downside. Doing what? We came down and targeted the previous day's low along with the Asian range low. Asian range low and the previous day's low. And these are all areas of liquidity that I always like to target. So, for example, when you're looking for reversal trades like New York reversals, you're ideally going to be targeting the previous day's low and Asian session lows. That's just something I look for with all my setups, even on the London continuation setups that I have. This one isn't a London continuation, but I always use the Asian session lows and previous day's lows as areas of targets. And why do I do that? Because I know above the previous day's highs and previous day's lows, there's liquidity. So as you see how when price came below this low, it immediately started going the other way. That's because it grabbed the liquidity, made people think it was going to potentially go higher before then continuing to drop off. So from here, where did price end up closing out price-wise? You can see price came all the way down to 13,300, and that's where price closed out. It looks like it tapped it almost to the pip. It looks like it missed it by maybe a pip, but regardless, it's not going to miss it by a point like this often. So we have the low of the day at what time? 16:15, which is about 3:30. Is it 3:30? Yeah, I say 3:30. So we have the low of the day at 3:30 p.m. after price tapped into what level? Price tapped into 13,300 big figure level, just like that. And now we're gonna go to a higher time frame to see if price potentially tapped into anywhere on a higher time frame. So what am I gonna do? I'm gonna pull my fib from this low to this high. And why am I using those? Because this is the current range that price is within. So just like that. And it looks like it's not even in that fib either. So actually, that's not even going to be a confirmation. So now we're going to move on to the daily time frame. And right now on the daily, the first thing that I do notice is we have this last down candle right there. And on the weekly, there's a lot of wicks in there. So we're going to use this, the last down candle, right in here. Pull it over. Go back to the 15-minute time frame. Pull this over. So you can see price kind of even missed it. So I'm not even going to annotate that. So there's not really any other confirmations for why this was the low of the day besides the fact that it tapped into that 13,300 level and just stopped moving after that. So honestly, there's not really much else to go over with this. This was a pretty decent setup. The ideal trade would have been shorting around this 13,750 to 13,800 area. That would have been the best ideal trade idea. But even then, if you would have missed that trade, you simply could have gotten on a couple retracements. But even then, it was Friday, so there wasn't really much you could do. So now let's get the schematic of what happened. We had the Asian session range. London session came up, cleared the Asian session highs, retraced back into the range. Then the New York session came, cleared those London session highs before eventually dropping off. So this would be a good example of a bearish New York reversal. That's what today was, a bearish New York. Well, yesterday was a bearish New York reversal. So now we're going to get a screenshot of this. I'm going to send it in the Telegram. So if you're not in the Telegram, make sure you join it. The link is going to be in the description. It's all free. But now we're going to move on to the actual weekly range, just like this. So we're going to look at what happened throughout this weekly range. So we're going to mark up the previous week's high. So the previous week's high is last Sunday is the previous week's high that didn't get ran through. And then we have the previous week's low, which is right here when the market opened. So the market automatically cleared the previous week's low as soon as it opened. So ideally, off of the rip, I already knew that more than likely we're going to have a bearish week just based off of that. So the previous week's low. Boom. And then we're going to get the weekly open, which is right in here. So what do we have? We have the high of the week that was created after clearing. The high of the week was created on Wednesday after clearing Tuesday's high. So we have the high of the week on Wednesday. We're also going to do something also. Since we have the previous week's high, we're going to use these areas as the potential area. And I'll show you why in a second. So we have the high of the week up here. And then we have the low of the week on Friday. So if you guys notice, A lot of the times on these indexes, I can't say for every pair, but on the indexes that I trade like US30 and NAS100, they tend to make the highs and lows of the week on Friday when it either continues the trend. That's something I've noticed. When it comes to Friday, more than likely price is just going to continue the trend that it's had for the most part. So we have the high and the low of the week. Now we're going to do something and see if there's also confirmation. We're going to use a fib from the previous day's high, the previous week's high to the previous week's low. Pull it over. And you can see that price did kind of have this reaction in this specific area. Just right in here. So we're going to go to a 4-hour time frame. And you can see the way that price reacted. We're going to go to a daily time frame. And you can see on the daily time frame from that the weekly, we stood below this weekly fib. We didn't close above. Even though on the lower time frames it was closed above, on the daily time frame we didn't close above any of these areas. So that could have been a potential fib trade that you would have been looking to take, just based off the fact that you pulled the fib from the previous week's high to the previous week's low, waited for the retracement, waited for a false break, and after you got the false break, price immediately started to come down to the downside. So now let's annotate what happened. We had the weekly open right in here. I'm gonna make this, what color this week? I'm gonna make it purple. Market open, pushed all the way up here, creating the high of the week. This is the highest point it came to. From here, price expanded all the way down to the downside, just like this. And then this is where the market ended up closing off, just like this. So this is just a basic schematic of what happened this week. Bearish week, not really much happened in my opinion. If you were able to catch the highs of the week and catch good sell entries anywhere up here, then you would have had a good week. But for the most part, it was just a bearish week. The ideal trade would have been Tuesday or Wednesday or even Thursday. These were where this is when price was consolidating around this 14,200 area, just building up orders to eventually just drop in price. So that's really all I have for you guys. If you found this video helpful in any way, shape, or form, make sure you like, comment, and subscribe if you haven't already. Make sure you share the video with a friend to help benefit them. And just overall, if you were able to gain an insight on how I personally view the market or even just how I personally trade, then make sure you just like the video. That's all I ask for. And with that being said, stay motivated by the fear of being average. I'll see you all tomorrow for the weekly market breakdown. And that's really it. That's all I have for you guys. I'll see you all soon. Stay productive and have a good weekend.